We've seen how Bollinger reversal enters on a re-entry, but a market that's too flat makes that re-entry not worth much. Let's see how the Bollinger Band's volatility filter measures how alive the market is. This filter doesn't care about direction. It looks at how much room price has to move, which is exactly what makes a re-entry worth taking. As always, experimental software, not financial advice, capital loss is a real risk. Backtest and live aren't the same thing. Bandwidth measures how wide the bands are in percent. Tight equals compressed market. Wide equals livelier market. The filter has its own bands, calculated separately from the strategies. Same period, 20, and deviation, 2, but two distinct calculations. Bandwidth tells you how much room the market has to breathe right now. Compares bandwidth against a fixed threshold. Above only, enters only when the market's already moving. Below only, the opposite, looking for compression. For Bollinger reversal, typically above only. A re-entry matters more when there's already movement. Use A is a fixed threshold. Above or below, it decides which side the market needs to be on. Compares current bandwidth against N bars ago. Not how wide it is, but whether it's growing or shrinking. Widening, rising volatility. Narrowing, falling. For Bollinger reversal, typically widening. Use A and B are independent. If both are on, both need to pass together. Use A looks at how wide the band is right now. Use B looks at whether it's growing or shrinking.